Welcome back. I'm Pratap here. Today is 20 June 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. So yesterday we identified 3 high liquidity zones from 75 minutes demand zone. So let us evaluate those stocks. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the community tab, then you will get the access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on this link. I'm clicking on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. We just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel, or any other important updates also we will provide at our Telegram channel. Now let's get into the analysis discussion. So we have identified 3 high liquidity zones, and in Lalpath lab we have got a very good long trade. So this is a high liquidity demand zone, rally base rally. This 75 minute zone fine tuned with 15 minutes time frame. So here you have a rally candle, base candle and a rally candle. This is the 15 minute zone. This is again fine tuned with 5 minutes time frame. So we have a rally candle, we have a base candle. The next one is also this is a medium size leg candle. That way you can treat, because this also comes part of the base. And next one is a rally candle. It's completely coming out of the base. But what we did, I just fine tuned this zone within this 15 minutes and daily area, so that the zone fits exactly within the high liquidity zone. But the problem with this zone is the risk is high. Because the risk 5 minute zone risk is high, what I did, I went to 1 minute time frame, again fine tune to find the order flow. But we should be very careful when you fine tune with 1 minute time frame. Only the entry point of view you should take care. But stop loss still you should keep at 5 minutes level. This is the way you should plan. See, we have a rally base rally. Here you have a order flow. But you have to draw a zone something like this. Strictly speaking, risk management point of view, you should plan like this. Because many times what happen, these 1 minute zones, they will be violated many times. Okay, sometimes it works. In today's scenario, it is a different scenario. That's why you should be very careful. Or there is one more rally base rally that you can combine like this. There are different strategies you need to build based on your risk management. But today it's a perfect trade. Let me go to the 5 minutes time frame. So here you got a trade in this trade, and after that, if you look into the 1 minute time frame, you got the trade in the 916 candle. 915 sometimes you may miss the trades, but 916 mostly your trades will be executed. And sometime price stayed within these areas. After that the price has moved up. And what is the target? Generally we keep our target as 15 minutes, right? 15 minutes target. What is the immediately available 15 minute zone? Here we have a rally base drop. 15 minute zone is there. This is the way you can limit your target. But Sometimes your prices may reach higher levels. See the huge rejection. There are higher chances that you may get more return. That's why you need to revise your target to the next level in case if this zone is violated. But how do we know? Because you already learned in our training lessons, trailing stop loss. I think in lesson 19, if I am not wrong, I have explained about the trailing stop loss, the 1 minute trailing stop loss. If you would have considered how maximum profit you would have gained, I will explain you. But a little above this, if this 15 minutes zone is violated, a little above, a daily zone is there. Actually, sorry for my mistake in the Telegram channel. I said it is the 75-minute zone. Actually, it is not 75. It is the daily zone. Sorry for my mistake. 75 minutes high liquidity zone is, this is the one, rally, base, drop. This is the high liquidity zone. But sorry for my mistake. This is the daily zone actually. Let me go to the daily time frame. Here you have a drop, base, drop. Daily zone is there. So within this daily zone, you have a fine-tuned 15-minute zone. Let me show you. You have a 75-minute zone. We have a drop, 1, 2, 3, 4, 5. Again drop. This is a compromised and drawing the 75-minute zone. This is not the high liquidity zone. Actually, in the Telegram channel, I told this is the 75. That was my mistake. This is the rally base drop this is the high liquidity zone. Later on, I realized that this is not the high liquidity zone. This is just a fine-tuned inside the daily zone. And moreover, it is a compromised leg out. Why we compromised it? Because inside we found a order flow, 15 minutes order flow. Go to the 15 minutes. So you have a rally base drop. Of course, there is again rally base drop. This is LOTL scenario. And this 15 minutes zone is our target. So here you need to exit. The low of this zone candle, here we need to exit. But inside this 15, again you have a fine-tuned 5-minute zone. This is for those who want to go for short trades. They can plan a trade. You have a rally base drop. So you have a 55-minute zone. Because the risk is high, again you can fine-tune to 1-minute zone just for minimizing. Here you have a good 1-minute structure is there. You have a drop, 3 base candles and again a drop. This is for the risk management point of view. Now you can plan your risk. See, many times what we go, the digital line. But here the entries are same. 5 minutes entry and 1 minute entry. So those who feel higher risk, this 1 minute digital line you can consider as your exit or a little above some stop buffer. That way you can. This is a rare situation. Different strategies you can feel. Suppose if this 1 minute entry is a little inside, then at the time you can adjust your digital line to the 5-minute zone. That is what we did in the demand zone. But when it comes to supply zone, we are limiting ourselves to 1 minute digital line mainly because the 5 minutes entry, 1 minute entry, they are exactly same. See also earlier the prices came up to here just before entering into 1 minute zone, they came down. That means there is a strong order flow in this area. That is what happened. See today, prices entered into the 5 minutes, fine-tuned 1 minute area. Of course, this is also 5 minutes entry also. This is 1 minute entry and 5 minutes entry. Risk management point of view, our digital line is at 1 minute level in this scenario. But this is not a high liquidity zone trade. The mistake I did in our Telegram group, the daily zone I considered as 75-minute zone in a hurry because the prices are moving very fast. So I did a quick analysis at the time, completely overlooked. So that's why I'm conveying my apologies to you guys. This is not a high liquidity zone entry. This is a normal fine-tuned zone at a daily time frame level. That way, but it worked very well, the short trade. It reached up to the 15 minutes target. But it's a lucky trade. It's a very lucky trade. Anyway, I am not considering this as a high liquidity trade. Earlier I thought it is a high liquidity because of my mistake. Later on I realized this was the high liquidity zone, rally based drop as reported in our software reports. Okay, how this trade worked very well based on 1 minute trailing stop loss. If you look into the 1 minute trailing stop loss, none of the demand zones, 1 minute demand zones are violated. See here you got an entry. Here you got the first 1 minute demand zone, drop base rally. Again rally base rally. So none of these zones are violated. Again here you have a drop base rally, rally base rally. After that again drop base rally. Now here again drop base rally. Focus on this. If this is violated, we would have exited our trade. So what is the low of this candle? That is the low of this base. This is a leg out. Leg out is the low. The low of this leg out is 2685. See the low of this candle? 2685. Again low of this candle? 2685. That means none of these candles violated this zone. That means still our trade is on. But somewhere here there is a strong order flow institutions. Yep. After that again rally base rally. And again rally base rally. And finally it reached the supply zone, 15 minute supply zone. Exited at not fine-tuned area at the 15 minutes. Let me go to the 15 minutes time frame. This is the 15 minute zone, rally base drop. Here is the exit. Exit is exactly here, not here. Here is the entry for short trade. Because we exited at the 15 minutes because our target is at 15, but this is the fine-tuned 15 minute zone inside the daily zone. Until then, none of our 1 minute zones are violated. This is the way trailing stop loss helped us to exit within this fine-tuned 15 minutes area inside the daily zone. And this is the way Lalpat Lab has given 21,060 rupees, which is 13% return on the investment. There is one more short trade I didn't register in the Excel sheet. The reason is it's not a HLQ trade. Initially, mistakenly in the Telegram group, I specified it is HLQ. Later on, I realized. But this trade also given a very good return. From here to here, till this 15 minutes target, it has given 9,105 rupees profit. From this 1 minute zone to this 15 minutes target, it has given 9,105 rupees, and which is a 5.8% ROI, return on the investment, 5.8%. But I didn't register that entry in our Excel sheet, mainly because it is not a HLQ trade. Okay. Anyway, this is a lucky trade. But this is as per our plan, this is our HLQ trade. And given extraordinary profit based on 1 minute trailing stop loss. And exited inside the daily zone. So this is about Lalpat Lab. The another one is Siemens. Siemens narrowly we missed the trade. This is also a 75 minutes demand zone. So we have a rally candle, 3 base candles and a rally candle. This is what our software identified. This one we fine-tuned with 15 minutes time frame. We have a drop. we have 4 base candles and then a rally candle. And this 15-minute zone again fine-tuned with the 5 minutes time frame. In the 5 minutes time frame, we have rally candle, 2 base candles, and then again a rally candle. Rally, base, rally. So this is the 5-minute zone. See, there is a strong order flow. See, earlier also prices came near to this zone. Just before this zone, prices moved up. And also there is a small pro gap is also there between this candle and this leg out candle. That means there is a very strong order flow. Because there is a strong order flow, with some entry buffer, you can plan your trade. At least with 0.1% entry buffer, a maximum I am saying. But this price, it came up to near to this zone, and the low of this candle is a little less than the entry buffer. Even if you add the entry buffer, somewhere it comes like this, a little below this. That's why narrowly we missed the trade. Again, second time also the same. Here third time also the same. Came very close. They are all just a little above the entry buffer. And that way we missed this trade. Otherwise it would have given another good profit. But anyway, we didn't get the trade because we can't deviate from the rules. The maximum is 0.1% entry buffer you can add, not beyond that. If your risk management does not permit, the 0.1% should be further reduced. If it is within your risk management, maximum you can keep 0.1%. That's why I am saying these are all based on your risk managements. But anyway, we didn't get the trade. Narrowly we missed it. But the point we should understand, there is a strong order flow in this fine-tuned area. And the last one is ABB. This is also a 75-minute zone, but structure is not good. Rally, base, rally, if you fine-tune, 15-minute structure is not good. See here, the 15-minute structure, if you consider this, first of all, even before also the price structure is not really good. Lot of consolidation took place. Still, if you want to take a rally, base, candle, rally, you have more than 6 candles. You have 7 candles. So that means mostly this zone will be violated. We didn't have a fine-tuned area, and because we didn't have a proper structure. See today what happened in the morning, 9:15 candle prices. It opened here and came down, and then the zone is slightly pierced, just slightly. Once it is pierced, that's it. It is a confirmation there is no order flow in this zone. But below this zone, again prices moved and closed here. Why it moved from here? There could be other reasons. Institutions might have created. You go to the 5 minutes, probably you get a clarity. Now institutions created some base candles and a new zones they created and pushed the prices. Not with the pending orders. With the new order flow, they pushed the price. But this high liquidity zone is violated. It is no more valid. Even it is pierced, it is no more valid. So these are the 3 stocks what we identified, and we got an excellent trade today in Lal Padlab. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.